The Nasdaq just printed the same monthly exhaustion signal it flashed at the March 2000 tech bubble peak. And Bitcoin's down 10.64% this week in a confirmed bear market. We finish on SignalFinder Pro's top-ranked stock and ETF. Don't go anywhere. SPX closed at 7,553, down 56 points after breaking the rising trend line from the March 30th low on the way down. Both SPX and NDX triggered weekly TD 9-count exhaustion signals simultaneously, and NDX completed a monthly TD 13 count. That's the exact same pattern that appeared at the March 2000 tech bubble peak. Breadth is cracking too. Russell 2000 posted a lower high while SPX was making a higher one. That's 3 layers of exhaustion stacking at the same time. At 4.99%, the 30-year Treasury yield is at its highest level since the run-up to the global financial crisis. TLT broke below the $84 support level as yields spiked across the curve. Net interest expense now accounts for 20% of total tax revenues, and that number is projected to climb from here. Oil's up 80% year-to-date, and that's what's keeping the inflation and the higher-for-longer rate narrative alive. Energy is the standout sector. Crude oil surged above $109 on geopolitical risk, then pulled back to $106 after a military strike was delayed. The underlying trend is still intact. XLE added 1.31% to close at $58.71, pushing toward the $63 resistance zone. Oil's up 80% year-to-date. That's a structural story, not a one-day event. Gold's holding the 4,470 level as structural support. Central bank demand has been the consistent bid underneath this whole move. There's some rebalancing selling pressure near term, so the price action is a little choppy right here. Copper took a Friday pullback, so that setup needs time to reset before it's clean. International markets are split right now. Emerging markets and Taiwan are catching a bid on AI semiconductor strength, while Europe is dealing with Eurozone inflation running at 3.2% and economic softening. EFA has real headwinds from the European side of that picture. Two very different stories, depending on which part of the world you're watching. Bitcoin is down 10.64% this week. It's a confirmed bear market, sealed by 2 consecutive closes below the 50-week moving average, and it's dropped 21.5% since the May 6th lower high. $3.4 billion in ETF outflows over 11 consecutive sessions shows the institutional exit has been sustained, not a one-day flush. There was also a dark pool sweep on IBIT, the largest ever for that ETF, and Bitcoin's been printing lower lows and lower highs ever since. SignalFinder Pro's Best of Best has 58 symbols on the shortlist today, filtered down from the whole market to the setups with the strongest structure. This is where the daily work actually starts. Not the news, not the noise, the ranked list. XLK tops the sector ranking at number 1, but it's down 1% on the session and flagged as lagging. The rank and the price action are telling different stories today. XLE is ranked second, and it's the one that's actually moving, up 1.31%. XLI is third and basically flat, down 0.08%. PBW, Invesco Wilder Hill Clean Energy ETF, is SignalFinder Pro's top-ranked ETF right now, sitting at $45.35, but down 3.49% on the session. Signal state is flagged as unknown, so pull it up inside the platform and confirm before you do anything with it. The rank put it here. Verify the signal, and then you make your own call. AAON is the top-ranked stock in Best of Best today, up 3.31% to $148.25. And it's moving while most of the market is in the red. Signal state shows unknown, so confirm that inside SignalFinder Pro before acting on anything. When the top-ranked name is up over 3% on a risk-off day, that's the kind of relative strength worth understanding. Quick recap. Indexes are flashing exhaustion signals near all-time highs. Bitcoin's in a confirmed bear market down 10.64% this week, and energy is the one sector actually leading. SignalFinder Pro's top picks today. AAON, up 3.31% for the stock. PBW for the ETF. Confirm the signals in the platform before you act on anything. And remember, this is educational, not financial advice. Do your own homework.